Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, November 5th, 2025. Well, we got a bit of a rally today. As the markets rallied, as we start to hear about the Supreme Court considering tariffs, what if we have to pay them back? In a vote against Trump, Dems win a number of state elections, governors, and a number of local issues. And now that the elections are out of the way, is the end of the shutdown near? Again, Jeffrey Scott is my name. My email is marketmripro@gmail.com, Google Group Top Down Trader, and the website's marketmripro.com. As always, these videos are for educational purposes only and not um, a recommendations for trading or investment advice. The intent of the video is always to demonstrate how I use the tools of top-down trading. Trading does involve risk, and you are solely responsible for any decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult your financial advisors. And I've got tools in multiple platforms, but I typically use the Market MRI Pro app on these videos. I do look forward to demonstrating in the next week or two some of the benefits of the Metastock add-on, especially if you trade stocks outside the US. My Google group is called Top Down Trader. How do you get access? You go to Google Groups, sign in with your Google ID, go to all groups, search for Top Down Trader, let us know how you want to be contacted, and you'll be let in. Know your news and earnings. Tomorrow, Thursday, it's more about what we're not going to get. We're not going to get jobless claims, productivity, or wholesale inventories, but we are going to get a whole bunch of Fed speakers. Earnings wise, Thursday will be a big day again. Trade Desk, MP Metals, Iris Energy, one that I've been playing. I know a lot of you are playing as well in the data center power space. It's interesting how Bitcoin miners are now data center power generators. It's a judgment call to hold stocks over earnings date is bad judgment to not know when your stock's earnings date is scheduled. Should we be concerned by a cluster of Hindenburgs? Why does this keep showing up? Because we had more clusters. I'll show you in a few minutes. And for me, the answer is yes. If you hear a screaming woman in the background, the good news is it's my wife talking to my granddaughter and not yelling at me. She's just very noisy when I do these videos, I think intentionally. Um, why do I care about Hindenburgs? Because if you look at going back to 2018, you can see that you don't usually have great performance afterwards, and it's 2 months later, only 17% you're higher. So I do heed the Hindies. You can go back to the Great Depression in the 20s, 1920s, and there's not been a major market sell-off that wasn't preceded by at least a confirmed Hindenburg Omen. And I think the clusters are even more impressive. Just look at some of the big sell-offs occur after it looks like a paintbrush was used. The leaders index, here it is, generated in Market MRI Pro, the index that we came up at our live meeting, and we'll be looking to see if this index continues higher. It's still above the 17. It had a nice recovery today. For more information about anything I talk about, marketmripro@gmail.com. Current customers that have questions about installation, they'll soon be ported over to the Windows Store. You'll be getting an email about that in the next few days. Coding at marketmripro.com will take care of you. Join Top Down Trader. And just one further point, one of the users, a long-term friend, is in town staying at our house with his lovely wife. I think they knew my wife before I knew her, and I've been married for 40 years, so that should tell you how many years we've known them. They were in our wedding. And he's a user and he had a bunch of questions. And I spent the afternoon showing him and answering his questions by showing him how I use the program. So if you have questions about using the program, why don't we email them to me at marketmripro@gmail.com. I will compile them over the next couple of days. And on Saturday or Sunday, I'll do a video addressing your specific questions onto the charts. So it was a much better day. You see lots of green. Bitcoin was up 3%. It's still down 6% over the last 5 days. Um, but a nice rally in Bitcoin pulled the Russell up 1.45, Q's up 0.66, Diamonds 0.47, Spider 0.35, dollar up again 4 cents, and the VIX was down as you'd expect. Russell, a lot of reasons why it's going up, and some of the reasons might be if the tariffs get overturned, that's likely to help small business. There was some talk on CNBC about how we have to pay back $60 billion. That'll hurt. If you look at new high, new lows, we did build up the new highs again today on the NYSE and the NASDAQ. We're positive 12 new highs minus new lows at 52 weeks on the NYSE, excuse me, and minus 38 on the NASDAQ. A sea of green on the indexes with 1 day change. And no, oh, because I did it on the wrong one. Let me just do it on the right here. You could see pretty much the only thing, let me just make that bigger, that was the only ones that were negative, barely negative, were real estate and staples. So interestingly, defensive plays led yesterday on a big sell-off, concern about technology, valuations, Palantir, et cetera. And the next day, they're the weakest. And you can see utilities was the next one. Meanwhile, discretionary, Amazon, materials, communications were up at the top, and technology was up, but more in the middle. Continuing on, if we look at themes, again, a total reversal of what we saw yesterday. Clean tech, solar, gold miners, lithium, marijuana, who cares, copper, blockchain, autonomous driving, fintech, data centers. So again, reversion back to where we were. And if you look at the breadth, you could see across the board, more sectors and industry groups were positive, and we were over 60% on participation. So much better breadth today, but did we really change anything? And I'm going to give you my answer, which is not yet. It certainly was a um, relief for those that took some heat over the last couple of days. And I used it as a chance, frankly, to take some more profits at higher prices. I'm not short the market. I didn't buy contra ETFs. I'm just not trusting that this market's done going down. And I only opened one new position in a sector that I was very underweighted. All right, let's take a look at the timing brief. And I've got something to show you today. The weekly, as expected, no change. You could see it doesn't look that much different than yesterday. Weekly is down across the board, but it's improved over yesterday's trade. Maybe we'll build some bottoming tails. That would be nice to see. The daily, again, no change over what we've seen, which means that the diamonds, excuse me, the Russells are still bearish, except now we've got weekly or daily Bongo Reds on everything, so drop below the 30. Now, I'm not usually at home at 9:15 in the morning. I was today, had a relatively easy day at work, which was nice. And so I was listening to Michael Webster speak on IBD Live. And he kept talking about the 21-day exponential as his support line. And it's very important to him that stocks don't break it. So I thought, huh, maybe I should look at that. So then I went and I built a new window of a timing model, and that would be this one. And what I did is I added in this timing model 21 period EMA. And do you see the 21-day EMA? You see it right there, but for the most part, you don't see it. And you know why you don't see it? Because it turns out the 21-day EMA looks just like the 30 period WMA. Yeah, it's just, I thought it was pretty funny because I thought, well, maybe I was missing something. but in reality, they really look the same. And the other thing that's interesting is we came right down on the SPY, on the Qs, and the diamonds, and we basically, if you look at the day before we touched it, we bounced exactly where we'd expect. Big recovery today on the Russell, but still trading below the WMA. Go back to, let's go take a look at the US index ETFs. And let's take a look at the SPY. Any change from yesterday? Yeah, we traded into the 17, which apparently the 17 exponential, excuse me, 17 simple, the 21 exponential, and the 30 period weighted are all going to be about the same. Now, how can I prove that? Let's just go in here. Let's drop in the indicators. Let's go down and find an EMA. Let's set this up to be the 21 day with no offset. And let's add it to the chart. Again, is it perfectly? No, but it's very similar. And right here, it's at the exact same point. So I guess I don't need the 21 EMA because I've got the 17. Pull back to obvious support, strong seasonality, look like they want to go higher. I just think there's a lot of things going on, but settling in Washington would probably be enough perhaps to get us out of this funk. We'll have to see. If we take a look at the Qs, it's going to be the same story over and over again. Pull into the 17 and a bounce, strong seasonality. Um, Much more positive feeling than yesterday, although I'll take that positive feeling away in a few minutes. The diamonds pulled into the 17. Actually, they tapped it yesterday. We're up today. Positive, positive, positive. If I look at the Russell, again, the same thing, um, except the 17 days above us. It'll be interesting to see what happens first. The Russell get above the 17 and go to higher highs, or the other markets to break down below the 17 and enter a lower lows, lower highs in a downtrend. And I'm not sure we know the answer of what's coming next. Volatility, we know it was down today. Here's the VIX futures. You can see it spiked up, failed at the 200, came back down, closed in the bottom part of the range. It was down 5%, still elevated off of what is typically resting. And the dollar was only up 4 cents today, but it's continuing its little march higher. But as we talk about, when you blow it up, it looks very different in that you are way off the prior highs. But do you run up to this prior gap area? That's sort of been my working hypothesis. And we'll see where we end up. If we look at commodities as the dollar is firming, you might expect some weakness in gold and silver. And what you're really getting is just some bouncing around as we're pulling back into the 50, both of them up 1% on gold, 2% on silver. They got to get above the 17. And the question is, what do they hit first, the 50 or the 17? A pull back to the 50, resting in a new breakout would not be unusual. Oil is failing at the 20 and the 50. And natural gas had a little setback, pulled back a little bit today, but it's been in a multi-day rally. Perhaps the thing that's most interesting, and maybe it's all driven by the data that the ISM and the ADP, which I think came out consistent with a stronger economy. So the good news is it came out with a stronger economy. The bad news is, does that mean the Fed doesn't have to cut anymore? And what you could see here is both the 10-year and 30-year had big moves. The 10-year up 1.86, the 30-year up 1.5. Something to watch. We're still well away from that 5% area, but strong days on rates are not usually consistent with strong days in markets. Although, as I mentioned yesterday, it seemed to be the opposite that or not the opposite, that when the markets were down, the rates came down with them. So maybe they are more aligned. Yeah, buckets. We are much more neutral than we were yesterday. This shows how many stocks were below the Bollinger Bands, and we reduced that by a third. Overall, probably a little leaning to bearish, but no longer giving me any kind of a signal. Why was I at all concerned about the market? Well, here is the NYSE, which has clearly broken below the 50 and failed trying to get higher today. Yeah, the stocks above the moving averages moved up a bit. We got at least on the NYSE, the new high, new lows are positive, negative on the NASDAQ. AD lines were positive, up, down volume, but look at this. We had another Hindenburg Omen fire. Um, I still think this market is questionable. And if one was to go back, and let's just look at 2007. Look what Praveen did. I didn't put it in this one. All right, Praveen, if you watch this, can you give me the calendar function in this one as well? The new calendar function is much better. It's easier to get there. But if you went back to 2007, you'll see there was a double top before it rolled over. We had a series of Hindies, hit high, a little bit of a pullback, new highs, Hindies, and the market began the great financial correction. So I don't believe on the left we're out of it. On the right, looks a lot much better. The Nasdaq pulled in, kind of had a positive looking candle there. But again, I don't think this was a decisive day that says we're done with this pullback. If we look at the additional market breadth tool that I built, you could see we have come up off the bottom on the 13-week new high lows, 40%, 42%, 27%, the laggard being the NASDAQ, and 42% on the Russell. So no longer giving us anything close to a signal there. I tried to squint and things, and maybe we're seeing the AD lines turn up, and maybe we'll start to see positive divergence or convergence this week. But right now, I still am worried about this market, especially with what we see with the that additional Hindenburg Omen. If I look at the ratio charts to get a sense of what's working, technology came off but picked up a little bit today. The defensive plays like Staples, utilities pulled back a little bit, real estate. Healthcare is still strong, and biotech's been looking really good. We've got a new tool that I think I can have even more windows than this, so I'm going to be creating a bunch of breadth ratio charts perhaps over the weekend. Let's go take a look at the JAS layout. So let me just say it very clearly. I do not think we are out of danger, period. Therefore, I am not going to go through and find all these great stocks for you to buy. We might be out of danger, and then I'll start to look for things like a O'Neill type follow through day, where we have an attempt to rally and then starting on day 4 and up 1% on higher volume. I'm not necessarily buying that this is the end. I did go through with my guest and I came up with one pick as I was showing him how I would work it up, targets and support. So we'll look at it in a moment. From a top-down perspective, a very different day where almost everything is green, and tech, finance, and energy were the top 3 on the broad-based indices that I have here. If we look at what was the leadership, you got solar, media, regulated investment, asset management, 1, 2, 3, 4, 5. That gives us 310 stocks. If we come in here and filter them for 5 and 500, we now have 196 stocks. And if we just add pullback at an uptrend and then rank them, that gets us down to 34, rank them by dots. Lumentum, light, so this one looks like. Big gap up. Now this thing is going to be extended. High jumps 100. I'd have a hard time chasing it. And it's probably an earnings rally, I would bet. 11.4, surprise on earnings and revenue. Look at the massive volume and the dots all relative strength and OBV. Beautiful, it's just too far. AIP, don't know this one. Arcturus, another technology play. Cheaper stock breaking out here. Was it on earnings? Earnings. They look horrible. I'd have to go read the news. There must be something good here. Beats estimates. So even though they were horrible, they beat their estimates. Cloud to Edge application design. Don't know anything about this company. Xper. And one thing remember, I got to do is highlight over that. It'll tell you what the company does. Intellectual property licensing company. All right. Doesn't pay a dividend below the 200. Probably not too interested in that. Solar Edge. Now I own JKS and First Solar, and I knew something was happening today because JKS was up 16%. First Solar, which had already had a big move, you could see after a little bit of a flagging action had a nice move as well. So solar continues to look really good. And going down this list, here's CSIQ, Canadian Solar, one that didn't look that good to me when I last looked at it, but a nice breakout there as well. Probably not the best in the group. That's probably First Solar. I also like to do a bottoms up review, and therefore I'll look at the broader group Impulse, and I will run one of my two favorite scans. One's the A plus. This is the tighter scan, and nothing made it. That doesn't look right. I thought we had a couple made it. Well, I guess not. And then I have the A scan. Let's see if anything made it here. All right, I must have a filter on. Doesn't feel like I do. Let's just see what happens now. Let's go A plus. Nope. All right, there is no A pluses. Let's take a look at the A's. And I know we had a couple. AIP was one we looked at. This Arteris broke out of this nice short consolidation. Don't know what they did, don't know why they moved. I wouldn't buy it without doing your own research. Just buy it because I'm looking at it anyways. But I think this is has to be a research check before I did anything. But nice breakout from a consolidation area. Commvault, COMM or CommScope. This one had run up. Let's see, earnings are out. Big surprises on earnings and on revenue. Love to see that. Broke out, sideways move. Is it getting ready to break out? Am I still on daily? Make sure. Yeah. Run as a solar stock. It's a literally flagging right here. And probably a break above that line tomorrow. I'd probably be interested in run. Let's take a look at its earnings. Earnings come out tomorrow, so I wouldn't do anything until after earnings. There's no reason to front run unless you've got a edge. Speaking of edge, Solar Edge had a big move and were earnings out today. They're out tomorrow as well. No, it looks like they were out today. We just don't have them yet. They beat on revenue. I don't have the earnings number. Lastly, I mentioned there was a stock I looked at that I was interested in, MAR. And what I liked about it seemed to be breaking out of this area of congestion. I think that I'd probably bring that area of congestion down a little bit, not as high as it is. And when I looked at it, I thought that I'd probably put my stop back here in the middle of this bar. But this looked interesting to me. Marriott consolidating here, run up, pull back consolidation, strong seasonality. Looks like it's breaking out here today, going into the earnings. Earnings are out with a massive, not massive, nice surprise. I was looking at the wrong column on both earnings and revenue. Not a great grower, pays a little bit of a dividend, but it looks to me like Marriott might be breaking out here. So those are some things I'm looking at. I have very little enthusiasm for adding to longs. I don't think this market has declared where it's going yet. Therefore, I'm cautious. Have a great day. And I've got company, but I'll try and do a video tomorrow night. Get your questions in for what you'd like me to do, answer on, on the program and how I trade. And I'll put out a special video over the weekend answering everybody's questions. Thanks, everybody. And I just leave you with the three words, heed the Hindi.